Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'm going to present here the Asian Session Live Market Analysis in the Forecast webinar for this week, 25th to 29th of April. And today we are on 25th of April between 5 and 5:30 GMT. I will try to explain to you the expected market moves from Monday to Friday of this week. And this being the last week of the month of April, the market is expected to show very volatile moves. So one has to be very cautious during that of the month end and the new month beginning time, because the players make some aggressive moves on the downside as well as the upside. So you might think that it is due to technicals the market is coming down, and suddenly you will find it's because of fundamental the market is going up, and things like that. They will try to twist it as quickly as possible, and this is mainly done in order to handle the extreme levels in the derivative market like futures and options, and also the forward covers of the exporters and the importers. Then after understanding the session-wise forecast in the four majors and the two commodity pairs, I'll give you the market reading technique, how we can note down the initial lows and the highs around 3:30 GMT and find out what they are trying to do it in the market with the help of the live market code page. So I have displayed the live market code page here and the GMT time. The GMT time, we follow it in order to track the 24 hours market. And the live market code page, I am just showing it here to make you to understand that how exactly we can see the current market condition and also related to that of the previous day with the help of the net changes. So here you come across CHG, there is nothing but the change. So here you come across the high and the low, then the net change from that of the previous day close. So if you refer, for example, Euro, which is 16 pips higher than that of Friday close, and USDM, which is about 60 pips lower than that of Friday close, and GBP is about 22 pips higher than that of Friday close. That way we'll be able to easily understand if it is in green, that means it is above that of Friday close market, and if it is red, it is below that of the Friday close market. And similarly, tomorrow if you look into it, then it will be the net change will indicate that today's close and how exactly the current market of tomorrow is going to be. So every day you'll find the net change will refer to the previous day close and find the difference whether it is in the positive zone or in the negative zone. Besides, you come across the highs and the lows in the live market code page. These highs and the lows are being set by the other players and around 3:30 GMT, and slowly they breach the high and go above, or slowly breach the low and go below, and thereby they are able to get the counter trade from that of their counterparts so that the trades are executed. So what we need to understand is what type of moves they are trying to do in the market in order to find out what is going to be the next move. So once you track it, then you find tracking the market is a child's play. Besides the forecast, we will also use the market reading technique, and with the help of that, the red forecast and the market reading, we'll be able to decide what sort of trade we have to do, whether we have to do a buy and sell trade or a sell and buy trade. And in the event, if our reading has gone wrong, as we are human, we are bound to make mistakes at times. So we should be able to find out in the event, if the market goes against, what is the contingency plan we have in order to limit the risk and also try to earn money during such type of moves in the market. For that, we use the trading strategy. That is, we use the hedge order to limit the risk, and we use trailing stop in profit-making position. And this is the first step. Then secondly, if it is hedged, we try to decide which one to close, either the buy or the sell position we need to close, and then we'll be able to book net profit. Otherwise, we also do either way trades with the help of the buy as well as the sell. If they drop, we book profit in the sell side, and when they rise, we book profit in the buy side. As a result, we'll earn in both the trades. So that way, Without any market fear, we should be able to trade at ease and earn money from that other market. And for that, the most important thing is the trading strategy, and also avoid doing over trading. That is, if we take too many positions, invariably when the market goes against, the equity will erode drastically. And if you avoid it, you can get rid of 50% of your market fear. Nothing more is required. 50% of your market fear can be eliminated if you avoid over trading. Take only one position at a given time and try to book profit, and then think of another position. Don't think that the market is going to give only now the opportunity, afterwards the opportunity is going to be missed. It is not like that. Every session you come across the trading opportunity. So it is not necessary that you have to keep awake during the Japanese session when you are in US during the late hours, or during the European session, because market continues to give trading opportunity during different sessions of the day, during different time frames. So if you calmly wait for your turn, and you will be able to easily book profit and take very good positions and earn money from that other market. And if you become impulsive and think that the market will run away and we have to go and catch the bus, then you enter into the running bus when it has already reached the destination. Then emotionally you feel very bad that you have taken a highest level buy and the lowest level sell. Avoid all those things. Then you will find that trading is really a pleasurable job. And coming to the other forecast for this week, it is the last week of April. So monthly trend reversal during the last week of the month, which gets over, and the new month, first week of the new month, will come across the trend reversal. They are called as the monthly trend reversals. There are occasions wherein in a week the month will get over and the new month will start. Then the monthly trend reversal will be limited to 1 week. Whereas here you come across the last week of April and the first week of May, the players are expected to make the trend reversal. Why they are making such trend reversals? Mainly, they make some extreme moves in the market during the month end and the new month beginning time, or in a week wherein the month gets over and the new month starts. And why they are doing it? In order to handle the derivative market, like options and futures, because there people bet in extreme levels, and the players will strike all those things and earn money there again. And that is why they make such quick moves in the market. During such type of moves, you have to be very, very careful, because the market is known to make some volatile moves and then aggressive moves. So during volatile and aggressive moves, if you try to enter wrongly in the market, then you will be trapped vulnerably. Most of the traders lose their account only during that of the month end and the new month beginning time, or the financial year closing time, and so the quarter ending time. So these are all the times wherein the market is known to make some extreme trend reversals, and during such trend reversal, the people might aggressively take positions and see that all the positions bring in enormous loss, and we don't have that equity to hold the unfavorable position. As a result, margin call is applied. So you have to understand the players have got the limitations to that of the traders in the form of margin call. So we have to handle that also, besides the stop loss on a daily basis. So keep all the constraints while doing the trade, and then try to plan your trade. Then you will be able to understand merely following technicals and fundamentals will not be able to help us. Besides, we need to focus more on the trading strategy, and also we need to find that we don't become panic or don't develop the market fear. If you develop the market fear, it is very difficult to eliminate the market fear. And in that process, what happens? You miss that opportunity to enter into the market, and afterwards the market goes up. Then you go and take a buy after the rise as a breakout trade. And the players know very well the temperament of the traders, and they induce them to take the buy position after the rise and simply hold the market, and they become sellers at that time. But after your buy, you expect the market to go up, but the market doesn't go. Probably it may go up for about 5-10 pips, but you expect the next resistance level could be the target for your trade, but they show about 5-10 pips profit for about 10-20 minutes. If you have not grabbed it or kept stop at entry, then they will show huge loss in such positions. This is what happened for many of the traders. They regret, and so the traders regretting about their trade and about their emotion is universal. No trader is really perfect enough to enter into the market. But you find invariably they try to regret. But after regretting many times, we need to find that we should avoid such circumstances, or we should be able to really plan for it. Unfortunately, the traders don't think ahead, or they don't go next step in that trading strategy. Instead, they go in next step in looking for certain other clues from technicals or from fundamentals. That is why you come across many of the traders, even though they have been following techniques and fundamentals for several years, they are not successful in making money from that other market. Now, with regard to the forecast, they are expected to make the nominal week beginning false move on the slide during that of the Japanese session, late Japanese session. Followed by that, they are expected to make a quick rise during that of the European session and slowly firm up during US session. Then tomorrow, they are expected to gain the levels during the Japanese and the US session. And during the European session, they are expected to make the slide. Then 27th, you know that market is anticipating the FOMC to take interest rate decision, and they are expected to rise the levels to start with on 27th, and then you'll find slowly they will gain during the European session. After that of the FOMC announcement by 18 GMT, they are expected to rise 0 in GBP. So they will only use FOMC as an excuse, but they will continue to gain the levels in the case of Euro and GBP, as well as USD and USD CHF. We note down all those things when compared to that of last week. GBP has gained, USDN has also gained. Last week, initially, they made the drop in USDN to 108 and GBP to 41, 42 area, and which has given the trigger to that of many of the analysts that GBPN will go down drastically. But against their expectations, the players gained the level on Friday in the case of GBP as well as USDN. So this is how they make the contrarian move to trap the traders. And then you think that no, it is not technical which is going to help us. It is the fundamental we have to focus on. Then you focus on the fundamentals. Then later on say that Euro and GBPN has to come down, but they will continue to gain the levels. And then you find that technical is working because it has reached the overbought condition, and so it is expected to drop, you expect, but they gain the levels more, and then you get confused with regard to the technical analysis also. So this is how the traders assume that something will work in a given time. When it doesn't work, they go in for a distress trade. Avoid doing such things again and again. Only foolish people will try to do it that way without understanding the folly. Then after that rise on 27th, 28th, they are expected to gain slow and steadily. And on 29th, also after a brief dip during the start of the Japanese session, they are expected to make very quick rise on Friday and during that of the European, and continue to gain the levels during that of the US session. And next week also, they are expected to make a quick rise and bring in upward shift in trading zone. So if you notice that how I was giving it, in the case of Euro, they simply made that drop just to confuse the traders, but it is only a range bound move. But in the case of GBP, they gained it because Euro holding GBP gain is mainly to drop Euro GBP and other European crosses. Nothing more than that. They will just gain a gain in the case of Euro as well as GBP and also USDN and USD So this is what you will be wondering. How come they can make the USD gaining move in the case of USDN and USD and USD weakening move in the case of Euro and GBP? This is what they do. And initially, to start with, if you see Euro and GBP are showing positive net change, USDN and USD are showing negative net change. So obviously, you think that they are going to make the USD weakening move because all are showing USD weakening. But when you take commodity pairs, that USD CAD is showing positive net change as the USD gaining, and Australian dollar showing negative net change as the USD gaining. So this is how they handle the commodity crosses to start with, by making the USD gaining moves in the case of the commodities and USD weakening move in the case of the majors, and that is a contrarian move. Making such contrarian moves, they try to bring in volatility in the case of the crosses. So one need to understand when they are doing the contrarian move, when they are making the USD weakening and the USD gaining move, then accordingly, if we take positions, we will have 100% earning from the other market. It is a question of only the perfecting the timing of entry. Many of the people say that the timing of the market is very vital. The timing of the market is very vital, but they do not know how to estimate the time. But here is a simple method that we follow the timings followed by that of the players, because the players are the one, they bring in the volatile moves, and systematically from that of year 1999, as I entered into that of the market in giving the forecast publicly, I've been following, they continue to follow the same trapping technique, nothing new in the market. But still, even though I continuously say that, people find that market becomes a surprise. That means what? They have the reservation in accepting that market is manipulated. Otherwise, they are afraid of telling that. Nothing more than that. Now we will go to the levels in which the currencies are expected to swing in this week. Euro is expected to swing from 1.1225 to 1.16, GBP from 1.4375 to 1.46, then USD yen from 111 to 116, and USD CHF from 0.9750 to 1.00, above parity for month end. And in the case of Canadian dollar, as you know that when they went up to 1.4142, and I was telling you that they are going to make a drastic drop, that they have come down lower level 1.26. They will consolidate and make downward stop and start gaining the levels from here. Then in the case of Australian dollar, again they were slowly gained the level. They are expected to reach the level of 80. As you know that in the case of the commodity pairs, they will lead the rally and lag behind. So they are lagging behind for the month end, and during the rest of the weeks, they will continue to gain the levels in the case of Australian dollar. But during the last week, they will not focus more on the commodity pairs. They will focus on the majors because they want to trap the traders having positions in options and futures. So keep a note of it. Otherwise, this webinar is being recorded and displayed in FX Street, and then you can listen to that time to time or view it and understand how exactly the market is expected to move. Use it as a guiding factor, and then use your own analysis and understanding the market, and later on you find you end up in making fearless trades. Still not becoming greedy and over trading, but you take limited positions and continue to earn consistently from that other market. Now these are all the initial lows and the highs noted down around 3:30 GMT. Now in the case of Euro, they are not breached the initial lows or the highs. In the case of GBP again, they are not breached the initial. In the case of GBP, they breached the initial low 44.28. They have come down to 44.22 because late Japanese session they are expected to make a small slide. And in the case of yen, 111.88 and 111.04, they are not breached the low or the high. Then in the case of CHF, 76, 97.66, 97.93, they are not breached the low or the high. And Canadian dollar, 1.2652 and 1.2694, they are not breached the low or the high. Then again in a narrow range, Australian dollar, 76.91 and 77.12, they are not breached. So excepting GBP on the brief downward stop, and the rest of the currencies, they are not made any breach of the initial low or the high, and that shows that they want the traders to commit positions, and later on they will try to move the market. Now with regard to the trades recommended, so I kept the buy limit order around that of the initial low 1.4428, and that becomes a limit now. Sorry, that becomes a position now. And in the case of Euro, I kept 1.1219 near that of the initial low. When they fill it, fine. I'll try to take it and keep 30 pips hedge order. And once a position makes profit, I'll keep stop at entry and try to book profit of 30 pips. Otherwise, I make that stop as a trailing stop of 25 pips and move the take profit level to another 30 pips, another 30 pips, another 30 pips, like that. So that when the trailing stop is not hit, when we keep 25 pips away from the market and also move away the take profit level, then what happens? We try to maximize the profit without taking risk. We have to eliminate the risk. That is the most important thing in trading. So without taking risk, we try to earn money from that other, maximize the profit from the other market. And in the case of USD yen, I kept 111.04, so it is close to that, a buy. And many might be thinking that USD yen, it just dropped about 80, 60, so 68 pips, could drop further down. This is mainly dipping USD yen as well as GBP nominally just hit the stops or induce the traders to technically think that there are some strong resistance, so GBP yen has to come down. They will pretend and then start gaining the levels again. So that is why they are doing it that way. And during that process, you can buy GBP as well as USD yen and GBP yen. They will continue to gain the levels. And one-sided moves are very common during that of the month and time, so that when they make some extreme moves, then the traders do not know what to do with the market, and they really make some panic trades. So keep in mind that we have to trade with care. Then these are all the market timings. So note down the early and the late sessions and also mid sessions of each of the major sessions. And in between sessions, you come across the gap time. During the gap time, they make quick false moves. Okay, let me answer to the questions which are asked here. And Jason, thanks for the good call. Thank you. So many would not have anticipated USD yen will gain during that time. So this is how the players play the trick. We need to read the tricks. Nothing more than that. Any other question? If you've got any question, you can ask me. I'll be willing to answer to the questions. As I explained, with USD yen, they are expected to continue to gain the levels and bring in shift in trading zone As I mentioned in the previous Monday, that they are expected to make a extended downward stop and start gaining the levels and going for a shift in trading zone. So they could go straight to 121 in this coming month. But you should not think that it will be a straight line rise, but they will be making volatile moves. This is part of the game. Because they have to confuse the traders. Only then they'll be able to earn money. If they give a clear indication to that of the traders, then the traders will also take positions and wait for the market to reach their destinations. And when the traders book profit, the players don't book profit. So that is not their objective. You have to always keep it in mind. They have to create the fear. And they are very good at it because of the money power. And KB. When you say the players handle the derivative market, are they buyers of the options and aim to hit strike? See, that is what, no? Normally what they do is in the month beginning, they try to do the lower level strike calls and higher level the buy calls. And people might be thinking that there are some extreme levels, the market may not go there. And when USD and, for example, it was around that of 114, they were doing in the month of February that 108 balls. Then what happened? They brought it down to 108. They made huge profit out of that. So this is how they just make impossible as possible in the derivative market, which is a very big story we may not be able to understand fully just like that. For that, they need to have various specific strategies which I cannot discuss in open forum. And Michael, thank you, Michael, for your appreciation. Any other question, please? So let me just show again the forecast page. Expected market moves for this week from 25th to 29th. Session-wise moves are given. So the early session swing and then late session slide means come down. So that's what they are doing it in GBP now, coming down. So that's how we have to follow in the case of Euro and GBP. They may not do simultaneously in both. Sometimes they may focus only in GBP and sometimes they may do in both. So that we have to fine tune with the help of the live market page and also the market reading. That is how we have to fine tune the overall forecast to that of the fine tuned conditions. What could be the conditions levels for Euro GBP? Euro GBP is expected to gain more levels. So the drop is a temporary buy opportunity. They induce the traders to technically sell and then start gaining the levels again. So it could go to 0.82 area, finally to 84, and then from there a big drop. But that will take a long time. So you have to be very careful while trading. And during that of the month end and the new month beginning time, don't focus on position trade. Only do swing trades. Avoid position trade. Position trade in the sense, avoid holding the position for a long time. That too when it is making loss. And when it is making loss, many people think that we can hold the position and make profit and call it as a position trade. That is wrong. Position trade is the one wherein the profit-making position is held to maximize the profit. So don't try to cheat yourself. You try to accept that, okay, I done a wrong entry, so I'll try to avoid that loss or minimize the loss, and I will exit out of the position or hold. I got the money power, but I will not add any more positions. Calmly wait, so the market will continue to give the exit opportunity. I'll be able to book pro. This sort of decisions you need to take rather than becoming distress. Again and again, if you become distress, that means you are unfit to be a trader. That means what? You will not be able to earn money from the market. You can be impulsive trader and say that no, I shorted euro and this came down. I just bought USD which came up 200 pips, and I know that they are going to rise. This sort of talk is of no use. Ultimately, what is important is that we should be able to consistently earn our money and improve our lifestyle. That should be our objective. So no more questions. So this is the forecast and the levels in which the currency is expected to swing. I displayed it here. And so I'll come back on 2nd of May, the next week. And give the forecast for the next week. So I take this opportunity. Thank FX Trade for the facilities provided to present the webinar. And also you people who have come here to listen to the webinar. And wish you all happy trading. See you next week. And we'll be able to really make good headway and progress in trading if you control your emotions. Wish you all the best in your trades. See you on next Monday.